Good evening.
Good evening, and thank you very much for having us, Khomoto.
Thank you so much, and apologies for butchering your name there. Now, we're having this conversation off the back of the announcement of your Q2 performance, and the headlines locally, globally, De Beers post losses for Q2. Help us understand exactly what this means. We will start with you as the Chief Finance Officer.
Thank you, Kumoto, and thank you very much for having us this evening. I would like to start with how things have progressed over the last couple of years. It has been an exceptionally challenging market conditions for diamonds. Post-COVID, we did very well with natural diamond jewelry sales. And we've seen that there's been a bit of a peak, and then in 23 and 24, we saw some real lag in terms of natural diamond demand or rough diamond sales. There has been a significant downturn in China. So Chinese economy is one of our biggest consumers of natural diamond jewelry. And we've also seen the growth of synthetic diamond supply as well, which has started to penetrate natural diamond jewelry demand. So those are the main headlines in terms of the overall global market conditions that have led to some low results for De Beers for Q2.
Okay. To you, Tebogo, as somebody who is in sales, you earlier said to me you do some analysis of the market, of your client. You refer to them as site holders. From your perspective, given the background that he's just shared with us, in simpler terms, what's going on?
Yeah, I think as Neri sort of alluded to and touched on that, it's a very challenging time, and it has been a challenging time for quite a while now. I feel like the last time I was here, still talking about a challenging time, and it continues to be a challenging time. I think if we look at the industry and where we are, the downturn in China really, hampered global diamond demand. So if you look back at where China was sort of pre-COVID, China used to be the second importer, or at least importer, or the second biggest diamond market. China really hasn't come back, and actually to even exacerbate the problem even a bit more, we've seen some of the polish that was previously in China being exported out into the market. So instead of China being a net importer, it has now become a net exporter, and one could even argue to a certain degree even competing with us in terms of trying to sell diamonds there, given the sort of the excess availability that was in China. I think the other thing as well is just the lab grown, and we can't underplay sort of the impact that lab grown has had on in the diamond industry. Particularly now where a lot of consumers are economically challenged, and a lot of people have been attracted to lab grown because of the lower price point. You put these two elements together, it's led to the situation where we're currently finding ourselves. And to even further exacerbate things, we now have this uncertainty in the global sort of macroeconomic space, where we have the word of the town, tariffs. We've seen some stabilization following last week's announcements on the tariffs, but you'd appreciate that in some of the regions where we currently trade, or some of the regions that are big influencers in terms of the diamond industry, that tariff rates continue to be high. And in particular, I'm looking at India and South Africa there. Our understanding is, particularly in the case of India, which manufactures 90% of the diamonds, our understanding is conversations are still ongoing, and we hope that in the end, hopefully the US and India come to a trade agreement that's beneficial to both countries, which will also hopefully see a reduced tariff rate.
Okay. Right now, we have the numbers here. We've got 30% reduction in sales. We've got capital expenditure having decreased by 35% to $1.72 million from $2.64 million. What do the numbers really say? Basically, what are the numbers saying here?
Yeah, I think maybe just try and dumb it down, or at least try and explain it in a bit more simpler terms. The numbers themselves are reflective of the situation we find ourselves, where we talk about challenging economic, or at least challenging times in the industry, and the numbers themselves do show that. But maybe if I can start off with the capital expenditure. So one of the strategic and very deliberate decisions that we've taken as a company is to optimize and phase our expenditure, in particular in terms of our expense in the Venetia underground project. And the idea there is, as we continue to be in this downturn where we haven't seen demand, let's align our long-term plans with the Venetia underground project to when we're expecting the market to come back. So that's really some of the measures we've taken. On the sales front, there are two things in that space. So one is lower prices, because if you look at a headline dollar value, with lower prices, even if you're to sell the same volume of goods, you're expected to still achieve lower, bottom line sales or dollar figure in that space. So these are sort of some of the things that are reflected in the numbers there.
Okay. From a finance perspective, when you look at your spreadsheet, how do we translate these to me, who is looking to you to take me out of the slump?
Yeah. So just in terms of how our revenue has moved, if we look at the global landscape for natural diamond jewelry, on average, it's about $70 billion per annum globally. And when you look at where that $70 billion is consumed by consumers, 50% is roughly from the US. The US is one of the biggest consumers of natural diamond jewelry in the globe. China is closely followed by about 12%, and that's reduced down to about 5%. India has continued to grow. So when you look at the overall consumer demand, you can see that ripple back to what you call the producer countries. So Botswana is a producer country, and we've had to reduce our volumes, and we've also had to reduce our prices as well. That has resulted in what we've seen as a really dampened revenue line for us for some time now. And to Tebogo's point, as every commercial entity has to, when your revenues are down, you have to balance the books. So we have looked at our capital expenditure, particularly in our South African mines, and we've also gone through a streamlining process at De Beers as well, where we've had to consolidate some of our operations globally. We have reduced our overall operating expenditure by about $100 million. We're looking to reduce that further as well over time. It's the responsible thing for us to do during this period of time to make sure that we're resilient looking forward.
Okay. I suppose when you... Okay.
No, I was just going to add, particularly sort of in terms of what does this then mean for the Botswana at home. So as Niri has alluded to, we've taken very difficult decisions as a business to try and actually retain and maintain cash flow. And then in some instances, this has actually led to, and the numbers would reflect, a negative profit. And these are decisions that help stabilize the industry as is now, and also protects the long-term value of the product that we sell. A simple example would be production. We've talked about sort of subdued demand in this space. If we had continued to produce at the levels we previously produced at, that then means we're supplying a product into a market that doesn't have as much demand, which then ultimately leads to depressed prices, or it puts downward pressure on prices, which then further devalues the long-term value of the product. So we've taken very difficult decisions to protect the product as we have it now, with the view that when the market does recover, it sets us all up in the industry for a very successful term there.
I think you mentioned streamlining, of course, some of the things that come with streamlining. But I suppose as the viewer would then be interested in finding out, we've had this conversation of Botswana being reliant on diamonds, and the fact that really the pricing is dependent on market and market forces. But at the same time, alongside that conversation, we've had conversations that says we want more as a country, we want beneficiation, we want value chain development and the like. And quite often in your language, you talk upstream, midstream and downstream. In the face of what we see now, the situation as is, what does this mean then to the three streams?
Yeah. Oh, sorry.
So I think from a Botswana perspective, Botswana is entrenched in every single part of the value pipeline, if you'd like to call it. Upstream, one of the most successful public partnerships in the world through Botswana, being a 50-50 joint ownership between government and De Beers. One of the world's most richest mines from Jwaneng and Orapa. So those will continue to produce in the future. There is no doubt about it. They are very viable, very economically viable mines, Class A assets. In the midstream, where we distribute the rough diamonds, we source and value. We have one of the largest sourcing and valuing operations in Botswana, being DTC Botswana, once again a joint venture between De Beers and governments. And then we distribute all of our rough from Botswana, from a De Beers perspective. It is the hub not only for our long-term contracts, but also for our auctions business as well. And when you look outside De Beers, we have set up a number of beneficiation factories within Botswana. So we have a number of our customers who've come and invested in Botswana to cut and polish diamonds. And we're looking to move further down the pipeline into jewelry manufacturing and retail in the near future. So from a long-term perspective, the partnership is so important to us. It's absolutely vital, and we will continue to invest in the right areas that mean value for De Beers, but also for Botswana as well.
Okay. I suppose the one, it begs the question, if we are looking to you to help us get out of sort of the rut that we find ourselves in, what plan do we have then? I mean, we've talked about the Chinese market. Mm-hmm. We've talked about the tariffs for example, lab-grown diamonds. What is the plan?
Yeah.
Yes.
Oh, yeah, not a problem. So in terms of from a planning point of view, and I'll touch on each one of these. So if we start off with lab grown, actually I prefer to call it synthetics. I think let's call them for what they are. Not lab grown sounds a bit more complicated and sophisticated, but they're just really synthetic diamonds. If you look at synthetic diamonds, so from a De Beers point of view, we have a three-pronged strategy. One is to defend. So really we need to educate consumers on the difference between lab-grown and natural diamonds. So we actually last year launched a diamond-proof machine that's able to tell the difference between a lab-grown and a synthetic. And the second approach that we're going with is differentiating. So telling the story about the unique characteristics of a natural diamond. And then the third part is build desire. So one of the key things that we've actually done this year, and we launched a program in Vegas a couple of months ago, is we've increased our spending in marketing. I think this year this will be the biggest marketing budget in over 10 years. So we've actually done a lot of things in that space to, one, differentiate and also grow long-term demand for diamonds. So these are just some of the things that we've done in this space in terms of really trying to prepare the market and differentiate between natural and synthetic diamonds.
I suppose from a finance perspective, again, we are funding these marketing strategies. What is the promise on the return on investment?
So I think from a return perspective, I mean, marketing is undeniably a good investment for us. It's our strongest weapon in our arsenal in terms of driving demand from a consumer perspective. And undoubtedly, when you think back to all the marketing that we've done over the years from De Beers, we're well versed in it, and we will continue to operate in such a manner and invest appropriately. It's our biggest driver. Mm-hmm. One thing I would say in terms of the partnership as well that's changed with Botswana from a marketing perspective is we are now partnering with the government of Botswana on how we spend our marketing dollars. So every dollar that we're spending is in conjunction with the government of Botswana as well. So there is a more conjoined effort with a view of having everyone look further down into the pipeline as to how the consumers are reacting. It's really important to understand that without consumer demand for natural diamond jewelry and for natural diamonds, the whole pipeline gets impacted. And marketing is absolutely core to our strategy to ensuring that consumers continue to be invested and interested in natural diamonds.
The US has just placed a 50% tariff. There may be demand in the market, but what does that do? You can say what you wanted to say and then speak to the tariff aspect.
It's actually very much aligned to that in terms of, what are some of the things that we're doing to sort of address or at least, meet these challenges. So on the tariff front, we've been rallying behind the World Diamond Council in terms of, having conversations with, with the White House or Washington in terms of really having diamonds exempted from tariffs. So we don't have, at least there's no diamond mine in the US. Diamonds are a natural product, and our view as De Beers, and again, we've rallied our producer partners in that diamonds, natural diamonds that is, should be exempt from the tariff.
Okay. I think as we come to the end of our conversation, unfortunately, we don't have a lot of time to be going into this. I can see that perhaps we can arrange another conversation. Let's just talk about, yes, you are the backbone of our economy. There's a lot of uncertainty in the market, in the economy. What do we say to Botswana, who view this as our mineral wealth, who are calling for, we want more stake in this, we want more voice in this? What do we say to that?
I think firstly, let me have a go at it first, and then I'll invite TK to come in.
Yep.
I think first and foremost, it's very important to note that whilst it's been a challenge the last couple of years, undeniably, this is an industry-wide challenge. You look at all producer countries, their diamond revenues are down. Point number one. Point number two is, when you look at the future of natural diamonds, there absolutely is a place for us in the future. We are going through a period of transition. Undoubtedly, we're going through a period of transition. And I would say to people at home who are viewing that we should be absolutely focused on the future. And there is a positive future for natural diamonds, albeit it might be different to what we've experienced in the past, but there is absolutely a future. So I think those are probably my two main passing words. I know we're running out of time as well. So.
There's a future for natural diamonds, but also conversations are critical. Minerals, perhaps the diamond doesn't hold as much value as it used to. What do you say to that?
Yeah, I think we've talked about the challenges of the diamond industry, and we've laid that out quite well. But there's also still room for optimism. I mean, when we look at H2, and actually maybe just a quick reflection on H1. H1 has been challenging, but we've seen signs of recovery. And as we look ahead into H2, I think if you look at what we've done in terms of the marketing, reduced production, just physical responsibility, I think this sets us up all well for a very successful H2 there, I say. But yeah, the key thing is, if you look at everything that we've done to date, despite the challenges, I still think there's room for some cautious optimism in that space.
Thank you so much. We were speaking to the Chief Finance Officer from the BS, Niranjan Mylvganam, as well as the Vice Senior President of Product Planning, Tebogo Kubanji, speaking to us about the future of diamonds, that there is actually positivity looking ahead, that we must be very optimistic, and as an entity, they've put all the strategies in place to ensure that the future does look bright and that there is space for diamonds. Benson Pudero follows at 7 o'clock with the news in Botswana.